Sorry, hello everyone. Yes, we're here to tell you a redemption story at the end of the day. As was briefly introduced, I'm the head of the DPF use case working group, trying to find practical applications for a digital pound, whether stablecoin or CBDC, we're agnostic to. I also have 25 years in Fintech and right now fractional in about 6 roles, literally with companies A to Z, from USDC lending, should you want to borrow some, come and talk to me, through to Bitcoin Lightning, Sato payments for gaming down the other end with Zebedee. So I'm here with Andrew, who can introduce himself.
So good afternoon, everybody. Oh, that's a bit loud. Could we turn that down a bit, or am I talking too much? Look, my background is I used to work for MasterCard. I looked after their products for Europe. I ran their prepaid and fintech business globally. And then I spent quite a bit of time with Vocalink. And so Steve's at the back. So Steve knows actually all the details. He was the technical architect. So whenever anything gets too complicated, we just need to ask Steve because he really knows what went on. But these days, I'm an academic at the University of Manchester, working with the DPF, researching consumer attitudes to CBDCs. And I have a number of other roles, including I'm a non-exec on the board of the Payment Systems Regulator. And anything I say today does not represent any views of the PSR.
Disclaimer. Required disclaimer. Okay, so as I said, we're here to tell you a redemption story. We're going to start with examples of technology that initially were a failure, but then came back from the dead and actually reincarnated in useful ways. We'll go to some devices we're going to show you. We'll talk about some payment schemes, and we'll talk about the learning Andrew has had over his career, and also some of the findings from the research you've done more recently with Gen Z, Manchester University people. So would you like to lead us off on the device front?
Sure. So does anyone know what this is? Anyone recognize this?
Newton shouted out at the back. Thank you. Anyone actually have one back in the day, which I think it was the late 90s? Okay. And did you find it useful? Was it a practical device?
You could turn it into an MP3 player.
Right. What about your good self? Any actual useful at the time, or a bit of a gimmick?
At the time, yes, but not further.
Not very useful. All right. So why were they hostile, your stories, though? Oh, you mean the handwriting recognition? What didn't happen?
Yeah, it does have kind of handwriting recognition. Look, it was very early days.
We're going to hand one round while we talk, but go. Oh, it's gone.
$1,000 when it was new.
Sorry. So that was the first example. We got another one.
Anyone know what this is?
This is a
rabbit
bit rarer.
From Hutchinson Rabbit.
Anybody have one of these? Hutchinson Rabbit mobile phone. A Hutchinson Rabbit, to be clear. I saw some.
This gentleman's had them all.
This guy, yeah, you had one as well. All right, there's one owner of this. Sorry, I'm going to come and... again, was this any better than the Apple Newton, in your opinion?
Well, it was great because it was actually a really good digital phone. We bought up a whole pile of them and used them to wire up the office. We never actually attached them properly to the PSTN.
So you used them in an office. Sorry, do you want to explain what these were, Andrew?
Sure. So do you remember the brick phones, the big brick phones? So when they came out, Hutchinson Rabbit wanted to have a more affordable mobile phone. And so they brought these out. Actually, the engineer on this, I went to university with, Nigel Hall, led that. And so they were a much lower price point than the other cell phones available at the time. But the drawback was they were telepoint. So they only worked next to a pub or a railway station with that logo. And then when you went out of range, they didn't work. So they were at a different price point. But what happened is that very quickly, the price of real cell phones started to plummet, and that made them look expensive. So that was somewhat of a, it died a death, poor Nigel.
So device launches, you can see that didn't work terribly well in that first incarnation. We'll loop back to it, but I guess you can guess where we're going with future versions that actually then did become great successes. So that's the device front, but we're now going to go kind of parallel over to the learnings from failures initially on payment schemes. So again, would you like to pick us through some of these lovely logos and examples? Who remembers Beenz? Anyone remember Beenz? Yeah? Okay. Did you actually use it?
No, my sister worked there.
Your sister worked there. How long did she work there? About 2 years before it went bankrupt?
Until the dot-com bubble, when everyone went bankrupt.
The dot-com bust, yes, exactly.
Yeah,
Diem,
everyone
do you
had
want...
a dot-com bust thing. Mine was in California with freedsl.com. It was the maddest few months of my life until we went bust.
Yeah. Do you want to explain
yeah.
Diem? Yeah.
Yeah. Anyone recognize Diem?
Yeah.
Okay, so it's the Facebook
Libra, yeah.
got
Rebranding.
rebranded. I was at MasterCard when that came out, and I was leading the Fintech business, so probably for reasons of non-disclosure, I'll leave it there. So we all know what happened with that. And then Paym, sadly, was something I was involved in. And remember Paym? It's great.
Okay. Anybody actually, I know Andrew did, anybody actually use it? Yeah? And did you use it more than once, you know?
I used it once, but I could never get anyone else to use it because nobody's banks would tell them about it. It was like the banks kill it.
So, Andrew, I realised, do you want to just quickly explain what it actually was?
Yeah, so Paym was a P2P service in the UK. It was intended to be similar to Venmo or any of these products. So in Thailand, there's a thing called Prompt Pay, which is InstaPay in Indonesia. There's lots of them around the world. There's Swish in Sweden. Paym was the UK version, meant to give you P2P payments. Got closed in March
2022 sounds about right.
22, is it shut? Yeah, March 22. Sorry, I said I'd have to go to Steve for all the answers. He didn't know he was coming here to do that today. He thought he was just here in the audience, but it's nice to go back to the old thing of always asking him for the answers.
So there are these attempts to get payment schemes to work, and then they don't. And again, we're going to do the redemption of how you might get them to work, and then obviously over to the headline title about CBDCs and so on.
So at this point, if it's okay, I'll talk a bit about the academic theory. So there's lots of models of consumer adoption, lots of different views. One of the oldest academic theories is this thing called technology adoption model, which essentially says that consumers and businesses adopt something if A, it's easy, and B, there's value. So that's what the technology adoption model. And if you believe that a digital pound is going to be launched, I have to say, from an academic point of view, at Manchester, we believe that it's a done deal, that a CBDC will be launched in the UK for political reasons. I know many people have a different view, but in our view, it's a done deal. It's just a question of time. If you believe that, then launching something which doesn't get adoption, so if you look at my Paym experience, if it doesn't get adoption, then it doesn't matter. So one of the big things in technology is, to quote one of my old colleagues, what doesn't scale doesn't matter. So if you believe that you want a successful CBDC, it has to be used. Now, either it can be used for a store of value, a bit like Bitcoin, or it can be used for an exchange of value, so you buy things with it. So if we focus on the second one, what would drive consumers to adopt a CBDC for payments? We think it's useful to look at other payment examples from history to learn from that. And we've done research at the University of Manchester with the DPF. We're about to go out with a big quant survey, which basically suggests that if you make it easy to use a CBDC and you give consumers value, then people will use it. And so if you think back to where did the Newton go?
Can we have the Newton back? Oh, at the back.
Okay.
There we go.
You know, I bought that for actually quite a lot of money.
Use gravity. Use gravity to return it.
And the blinking thing stopped working. So originally I'm an electrical engineer. So I had to buy a new screen for it and suddenly retrain myself to solder the thing back together again. Anyway, why did this not succeed? Well, to the gentleman's point, the value of it wasn't that great compared to the $1,000. And it wasn't actually that easy to use, so it failed. But to William's point, there's of course a redemption story that this is the basis. The same people that worked on this then launched the iPhone and the iPad. So that was a success in the end because that did have value and it was easy to use. If you look at the
Can we have the Hutchinson Rabbit? Who's got that? Right.
Get the rabbit back. The same people that worked on this, do you know what their next project was? So it was orange. So the guy engineer did it. Name is Nigel Hall. Look him up. He was the engineer on this. Complete disaster. We all mocked him. And then he was on Orange. Obviously, Orange were very successful, very consumer focused, very creative about the pricing models. And then Nigel spent his entire career wandering around the world, starting up Oranges around the world. So it's the same team that failed with this, won with Orange because it was easy to use. You remember Orange, famously, all their adverts didn't have a phone in. It was all about the human factors. And it was also really valuable. It was a mobile phone with a tariff that really spoke to consumers. So when we think about the adoption of a CBDC, if we go on,
Yeah.
our research is that really we think that consumers will use it if it's easy. So if you click on that...
You can scan this barcode and you'll get the prototype Andrew used in his research. So you can load it up and click around. We'll do that while Andrew continues explaining, yeah.
So what we did is we built a prototype of a bank app. We copied typical bank apps in the market, and then we built CBDC use cases into it. And what we found, and it was surprising in our research, that we thought we'd have to explain. So we had about a sample of about 120 students. We did it face-to-face, so for any academics in the room, we were doing qual first, we're going to do quant next. So we did qual, it's called hypothetical service experience research, so you give them the chance to use it hands-on. What we found is that actually we thought we'd have to explain to them how to use it, and in actual fact they really got it very, very quickly, much faster than we expected. So you can have a play around with it and maybe try it with your elderly parents or your young children or your friends, see what they think. But it goes through a few use cases for CBDCs.
You'll find it's a kind of guided route. It was run in interviews, so you can't quite click it, but you'll get guidance, a couple of journeys of these different purchasing use cases, the 3 you see, P2P, payment to government, which we're about to explain in a little more detail, and pay to machine.
We also used a use case which was very controversial. So again, for any academics in the room, it's a thing called controvision. And so the idea is if you want to really elicit, to use the academic jargon, thick responses, you give people a very controversial use case. And the use case that we chose was a meat budget. So because of the climate crisis, we imagined that the government gave you a budget to buy meat, and it tracked how much you bought meat at a supermarket, and then it gave you a budget each month for you to buy meat, and if you overspent that budget or you overspent your petrol, any carbon intensive, then you'd be taxed more. Just to be clear, we're not suggesting that you do that. The point was the research to see how controversial that was. And what we found actually was that it wasn't that controversial. About half the students were not that bothered. And one of the ladies, I can't do the accent, she said, "Really? Are you going to really buy your sausages in secret?" And her point was, are you going to buy your sausages in secret? Because, you know, the student's argument was that everyone knew where you spent money. So our first point is that we think, and our research suggests, and we're about to go with a big quant survey, is that if you make it easy, integrated with existing, then people will use it. So that's the first pillar of the adoption model. And if you think of the iPhone, didn't really come with instructions, people knew how to use it. If you think of Orange, it was easy to use, the tariffs were easy to use, that's why they were successful. If you think of Paym, so Paym was not easy to use because it was implemented differently in all the banks. And the value compared to, for example, this gentleman spoke about using the Revolut P2P, the value compared to alternative wasn't really there, so it struggled. Whereas if you look in Thailand, my favorite example, PromptPay is a P2P service in Thailand. The Thai government are very proud of it, and I'm very proud of my small part, and so Steve. That, about a third of the Thai economy runs on PromptPay now. 41 million people signed up for it in 20 months, and it added about 1.2% to GDP of Thailand, if you believe the numbers, so hugely, hugely successful. And part of the reason was for all those successes is it was easy to use, and we think If you get a properly designed CBDC, you integrate it into existing, then it'll be easy to use. But also, we think that, conscious of time, it also needs a push.
You've got to push it with a government driver.
And so we modeled an example of basically taxing your car and the ability to give you a digital vehicle tax and giving you some kind of discount for using a CBDC. And the research was really clear. The participants said that as long as it was easy and it gave them a benefit, and also they felt that if it was a government-related activity, for the government to make you use a CBDC was kind of fair, if that makes sense, was one of the feedback, that of course they'd use it, overwhelming. And if I go back to my prompt pay example, you know, the government prompted people to use prompt pay because, for example, the COVID payments, you couldn't get them very easily if you didn't use prompt pay. So it was a very positive government push. Government today, for example, disperses universal credit through the bulk system. It doesn't use faster payments. So if you use CBDC, people will get it a few days early. There are things the government could do. And I think that, and I'll hand over to William to wrap it up, I think that's really what we found from this, looking back at history of failures, some of my project failures, is that really, if you focus on making it really easy for consumers or businesses, and you give them real tangible value, then you will see adoption. And so our view is that a properly designed CBDC that was easy to use, that gave value, will drive adoption.
So yeah, to summarize, integrated into existing payment infrastructure. You saw on that, hopefully you've got it on your phones, on that wireframe. It's in there, it's in your app, it's another currency. Also, in terms of actual spend, it could be glued in, and we've figured out the technical details, glued in just to clear on existing point of sale rails. You don't need to deploy a whole new great infrastructure. And then this government policy push piece to actually seed the thing and get it out there. That's the difference between a succeeding prompt pay Thailand example and a not succeeding, you know, Paym, etc. example.
So we'll take some questions. Have we got time for questions?
Yeah.
We tried to make it fairly prompt. So did we call it a CBDC? So we used the Bank of England's description of a CBDC when we explained it to the students, and they all quite quickly got it. And they even, when we prompted them, understood the difference between commercial money and central bank money. And that research is echoed by the EU's done some research in Germany with the University of Bern. Again, consumers get it faster than you think, surprising. For the meat tax experiment, so again, back to integration, we modeled it that, so today you don't pay VAT on meat, yeah? So we modeled it that you would get so much meat or sausages VAT free, but once you got up to your limit, then you'd pay VAT at the point of sale. That's how we modeled it.
The limit being on a carbon tax logic, just to be clear. So that was that carbon tax concept, which was far less of an objection than we expected it to be.
What problems do you see with current payments, CBDC? So our view is that it'll be a political project, and it's not solving any consumer-based problems.
Second.
Somewhat controversial view, but that's our view, because if you're a central bank, particularly of a smaller country, if you don't launch a CBDC and the Americans and the Chinese do, your currency is toast.
Sorry, we've got a question on the mic here, Andrew.
Hi.
Hi, I was just interested in the example of the road tax, giving somebody an advantage by using CBDC, and I'm guessing for other things as well. I mean, governments really can't be that unfair, surely.
So my experience of doing this in other countries is that the governments have made a public policy choice and have given a benefit to their. Again, I do not make any statements on behalf of the PSR. This is my own personal academic view, but I think history shows that governments will push their solution.
And I'm just going to wrap it up by answering a couple of the points of kind of the research. It was about 100 students, Gen Zers, MBA kind of or MSc type story. So yes, it's a bias sample. We've had that question before, but connected kind of to that is what's happening next. This is moving to a more kind of, that was qualitative interviews, you know, recorded and then summarized and so on. The quantitative, you know, mass, we want thousands of answers is coming soon. Andrew's done a draft design. We've been talking about that in my use case working group, and it will go, needs to go through a bit of a test phase first, but it will go public, and DPF's going to help promote it, so you'll begin to see it.
Yeah, so we're working with some academics from Georgetown University on kind of basically the behavioral economics part of it, the bit I don't know. So I'm working with them on that. So hopefully get that done soon.
Okay, so
I think we're out of time, but look, I hope that was interesting and gave you a slightly different point of view on...
One final question.
Yeah.
If you don't know the answer, I'll give it to you. Do you know who invented the term CBDC?
Who invented the term, no, go on, who invented the term CBDC? Go on, trivia fact for the afternoon. Go ahead.
Shall I tell you? Yeah. The inventor of the term CBDC is Richard Gendel-Brown, and he's sitting over there. Richard, will you stand, please?
Oh, you're going to talk about this? All right, well, it's a wonderful, no, thank you. That's a wonderful intro to our final session of the day. So, Richard, you're on next. If anybody has any questions, find us at the drinks after Richard, and you're going to have to tell us that story as well.
Thank you very much.
We could have teed that up better if we tried.